Hello and welcome to this video module on SEC filings, the 8K or current report. We're going to take a look at how best to extract information from an 8K. As with our other modules on SEC filings, we're going to start by going to the SEC's company search website, and we're going to continue to focus on Vera Bradley, a company with a 2010 IPO. 8Ks are filed to disclose material news about a business, often associated with a press release. And you'll, as a banker, especially want to focus on news about acquisitions or earnings reports. So between 10K or 10Q filings, you may see an 8K pop up. It's very important that you, as the banker, read that, see if it's earnings news, because if it is earnings related, it's reasonable to assume that that news would be priced in to the company's stock price, thereby affecting its total enterprise value and its TEV to revenue multiple, TEV to EBITDA multiple, and PE multiple as well. Let's flip over to the SEC website. As we've done before, just typed in the symbol. We're going to search for companies, and while we previously clicked on the most recent 10Q, now I see a few 8Ks. So I'm just going to click on and see what they happen to be about. This one says, actually it gave us a little teaser right here, departure of directors and officers. Doesn't seem super important for me for valuation purposes. Next one, department of directors or officers, not super important to me for what I'm doing. But here, the most recent one, results of operations and financial conditions. So I'm going to click on the 8K. And again, SEC headline, Form 8K for the company. Just tells me August 30th, 2011, the company issued an earnings press release. The press release is attached in an exhibit. So we're going to go back and we see press release exhibit. So this is, while the 10Q was sort of a shorter version of a 10K in terms of being quarterly results, the 8K is even shorter. So it's very easy for us to go through. We could just see that this is a press release from the company where they're announcing quarterly results. But it is, since these are now out in the market, it's important that we use what we can from this when we are using data for evaluation. Like I said in the introduction, this is priced into the company's stock price. It's already affected enterprise value. So we need to go in and look at the numbers, and if they're provided, we need to change our company analysis or M&A comps analysis with this more recent information. And we just probably want to put a footnote when we're doing our comps that the source is an 8K, as a press release, as it's not quite at the 10Q level. So we also want to flip through to see if there's anything material, talking about, I don't know, if any discussion about an acquisition or anything, year-to-date results, revenues increased, and here they actually provide outlook, which some companies don't do. But this company has provided outlook. They expect net revenues for the third quarter, 107 to 110 million, and EPS. Now, you may even have an analysis that includes something like this, or if you're just going to be in a meeting, it's important that you know these sort of stats on your company. But as we've done always, we go to the top of our balance sheet, grab our cash number. It's lower than it has been, but the company's got plenty of availability, I think, we recall, on its borrowing. So we've got our cash number. We've got our long-term debt number of now 71 million, up from 67 at year end. Again, negligible current portion, so we'll just use that long-term debt stat. We'll next go down to the income statement. You see they've got the current quarter, but we, for LTM or last 12 months purposes, just want we now want the combined first and second quarter, so the 26 weeks ended at the end of July in 2011, and we're going to back out the end of July 2010. So we're going to add in, looks like we're going to add to our year end, we're going to add about 40 million of revenue to get our LTM revenue. And as we've done before, we look at our operating income, sorry, 41 and 26, and we are going to add our D&A to that, which is about 4 million for each. So actually it looks like about a $15 million increase in EBITDA. Great results for this company. We're also going to look for our earnings per share. And if we remember from our other modules, with this particular company, they had a change of corporate form from an S Corp when they were private to a C Corp, which affected the way they deal with taxes. So if we look at the previous year, we see almost no taxation. Current year, more like a 40%, a normal tax rate. So we can use our net income for the current year, but we're going to try to look for some sort of adjustment, and sure enough, on the next page, the company is providing a reconciliation of non-GAAP financial measures, basically GAAP, generally accepted accounting principles. So the company now needs to report as if it was a C Corp for the previous period. So we could see that they're telling us they did adjusted net income of 19 million. Good thing we grabbed that, because we would have, if we had erred, we might have grabbed the 25 million, showing that net income had actually gone down. But now seeing the 19 and the 25 in the current period, we do know that net income in fact went up 6 million when looked at on a comparable basis for the LTM period. Likewise, we have an earnings per share number, so we have a diluted 61 cents and 48 cents in the previous period, so we can add 13 cents to our year-end EPS. And we're also probably going to get a share count from this document. Yep, we've got a most recent fully diluted share count. So just flipping through, we've just got the end of the financials. Again, I said it's a very short document, especially when compared to a 10K, but even shorter than a 10Q. But it's imperative that bankers look and see what 8Ks have been published since the previous financial report. That's it for the 8K. We've got a couple more modules coming on IPO documents and the proxy statement.